It is February. Super Bowl is over, and unless you funded the political campaign of the current president, or sponsored a documentary about his wife to get more business for your corporation or tax incentives, you're still supposed to file your taxes by the month of April. We live in a strange time. The president promises huge dividends from his policies.
It's too much winning. We can't take it anymore.
But since the government hasn't figured out how to print money without inflation yet, we still have to cover the bill.
Fun coupons!
The tax code changes every year. In fact, for this 2025 tax filing year, there are some massive updates, including changes to the SALT deduction cap and bonus depreciation that could save quite a bit of money for you. Curious what these are? Watch the video until the end. Because today we are walking through the 10 deductions you can claim to keep your business slightly more efficient than our government. Hi, I'm Felix. Now, for the especially gifted audience members who usually require a safety warning on a cup of coffee, I am not a CPA, I am not a tax attorney. I'm just a business owner who has to file my own taxes by the month of April, like you are. This is simply a checklist I created for myself so I don't forget anything on my own returns. Use it, lose it, that is totally up to you. But seriously, if you want to be safe with your returns, go talk to a real accountant. With that out of the way, let's get into the list. Number 1 is professional service fees. Did you hire a property management company last year? Did you pay a lawyer to draft a lease or evict a tenant? Did you pay a CPA to strategize? All of those fees are deductible. If it was for your business, write it off. Number 2 is property taxes, and this is where we see huge update for 2026. Previously, the SALT deduction, that's state and local taxes, was capped at $10,000. But for 2025 tax year, that cap has been temporarily increased to $40,000 for individuals and joint filers. If you are in a state with high property taxes like California or New York, this is a game changer. Don't miss out on this one. Number 3, interest. You likely already deduct your mortgage interest, but don't forget credit card interest. If you have a credit card used exclusively for business purchases like materials or services, that interest is deductible also. Just remember, personal credit card interest does not count. Keep them separate. And just in case, credit card interest isn't the most efficient way to use money. There are plenty of various options you can use to use capital to operate your company. If interested, let me know in the comments below and I'll make a special video for you. Number 4 is insurance. Liability, fire, flood, theft. If you paid a premium to protect your rental, it is a deduction. None of it is cheap at all. Well, at least you're able to write some of the costs here. Also, if you have employees for your rental business, their workers' comp or health insurance is deductible as well. Number 5 is a big one. Depreciation. Usually you depreciate the structure over 27.5 years. But for 2026, we have the one
big beautiful bill to make America great again.
Here's the headline. For rental property placed in service starting January 19, 2025, you might be eligible for 100% bonus depreciation under Section 179. Something tells me you were not the target audience for this big beautiful bill, but if you qualify, why not to use it? This lets you write off the full cost of eligible items like HVAC, security systems, or office furniture in the first year rather than over time. Number 6, utilities. If you pay for water, gas, or electricity and don't pass that cost on to the tenant, deduct it. Simple as that. Despite all the promises, these are going up as well, so don't hesitate to write them off if you're paying them. Number 7, repairs and maintenance. The rule of thumb here is, does it restore the property to its original condition? If yes, it is a repair. Fixing a leak, repair. deducted. Upgrading a perfectly good countertop to granite, that is a capital improvement, which brings us to the next one, capital improvements. These are renovations that extend the useful life of the property. New roof, new addition, finish in the basement. These usually need to be depreciated over time, not deducted all at once, unless they qualify for that new bonus depreciation, the one that I mentioned earlier. Number 9, the home office. Since the 2017 Tax Acts, employees can't really claim this, but self-employed landlords and businessmen can. If you have a dedicated space in your home used only for your rental business, you can deduct a percentage of your housing costs. Number 10, travel. If you have that home office we just talked about, you travel from home to rental property is deductible. Track your mileage. Whether you're showing a unit or meeting a contractor, every mile counts while traveling to your property. You can deduct up to 50% of the cost of your meals on the way. Just keep the receipts and document who you meet with and the business purpose. The bottom line is simple. Documentation is the key. If you get audited, you need proof, not stories. Get your taxes ready and stop digging through a shoebox of receipts every single year. Use a digital tool to track your expenses. There are plenty of apps out there, just pick one that works for you and actually use it. Seriously, you'll thank me later. Now go get ready to file. Schedule your appointment with your CPA ahead of time. As always, be good people. Keep your receipts in your records and not in your heads, and I'll see you in the next one. Bye.